Ever wonder what it takes to build Canada's biggest business and investing conference? Welcome to the Truth About Real Estate Investing show. My name is Erwin Cito, and my old friend Seth Ferguson returns to the show after losing all his rental properties to a nasty divorce. Along with the worst part, he lost his golf clubs also in that divorce. Then he went on to start the multifamily conference in COVID back in 2022, which was, in my opinion, it was excellent. I had front row seats to it. In 2023, the event was headlined by Grant Cardone and Alex Rodriguez. 2024, Wolf of Wall Street, Jordan Belfort, and Robert Hyderbeck of Shark Tank and Dragon's Den fame. Today, Seth takes us behind the scenes on how he scaled from a couple hundred-person event, which was headlined by Kevin O'Leary back in 2022. Again, COVID was still going on, so Seth recounts the stress levels of trying to operate the first big event, just barely exiting COVID. Anyways, the plan is for this event in 2025 to be a 5,000 person attendee juggernaut. That will be easily Canada's largest business and investment event, with speakers like returning Kevin O'Leary, Alex Rodriguez, Dragon's Den, Michelle Romano, and Manjit Minhas, along with a major speaker that's yet to be announced. Powerhouse is an apt name for the event, and also same goes for the budget. We dive into the marketing, the event growth, how Seth landed some of the biggest names in the business. For details and to register, go to powerhouseconference.com. Again, that's powerhouseconference.com. The event takes place over 3 days, May 23rd to May 25th in Toronto. We'll also get into Seth's own real estate portfolio because this is a real estate investing show. Of course, we're going to dig into why he shifted away from the Canadian rentals to focus almost exclusively on multifamily investments in landlord-friendly markets like Texas and Florida. Seth and his team specialize in garden-style multifamily properties. So that's low-rise, think like 3-story at the most. So that's low-rise, landscaped apartment communities. So these look more like resorts than they do what we're used to in Canada of high-rise apartment buildings. These are more common. These are more common in the U.S., but virtually unheard of in Canada. I personally can't think of anyone I know personally who invests in garden-style multifamily in Canada. He shares what makes these assets so attractive, how they're managed, and why he's also drawn to build-to-rent communities. So that's new construction, purpose-built rentals, also in these same markets in Texas and Florida. Also why, we're going to talk about why he's bullish in those markets as well. For more details on Seth's investments, go to www.cpicapital.ca. It's CPI, those are letters, cpicapital.ca. And please enjoy the show. Before we get to our guests, I want to take a quick second to share something valuable with you. If you're serious about building wealth through real estate but struggling to find profitable investments in Canada, I've got something that will help. I've put together a comprehensive guide to U.S. real estate investing for Canadians, breaking down the best markets, financing strategies, tax considerations, and landlord-friendly states where Canadians are getting better cash flow and long-term appreciation. It's completely free. You can grab your copy at www.truthAboutRealEstateInvesting.ca. Just look for it on the right side of the page. Along with the guide, you'll also get our weekly newsletter that goes out to over 10,000 Canadians at no charge since 2010. Yes, I've been sending it for every week since 2010. We send new podcast episodes as they're released, so you never miss out on these expert insights, invites to exclusive in-person and online events with top real estate minds, actionable strategies to help you grow your portfolio and build wealth faster. Again, go to www.truthAboutRealEstateInvesting.ca and download your free guide today. Now, please enjoy the show.
So Seth, I see all the ads in my social media feeds. So what's keeping you busy these days?
Absolutely nothing.
Nothing
on my plate.
Yeah.
I'm not following you around the internet along with everybody else. No, absolutely nothing.
Yeah, right.
Yeah.
I have an idea what your advertising spend is.
Yeah, it's we are spending a lot, but it's the same thing every year. But yeah, it's it's just Canada's #1 business and investing conference. No big deal. Yeah.
Probably biggest budget, most attendees.
Yeah, like this year will be about 5,000 people. It's big.
Okay, so 5,000 expected. What was the first year?
1,000.
And that's 2021? It was 2022?
Yeah, that was coming out of COVID. So that was 4 years ago. And then we did 2,500 past couple of years, and then now we're basically doubling in size.
Okay.
Yeah, crazy.
and the budget and the speaker profile.
Yeah, yeah. Actually, this year for speakers, I think this is the best lineup we've ever had. Just to rip off a couple names. So we've got Kevin O'Leary, who spoke at the first event. He's coming
he
back.
was excellent.
He was great. We
Yeah.
got really good positive comments. We'll talk about Kevin and the keyboard warriors in a little bit. But yeah, so Kevin O'Leary is coming back. A-Rod asked to come back. We've got another speaker who has asked to come back, who we haven't officially announced yet.
We could release it, and I'll just hold on to this episode to say it's okay.
No. We'll
Okay.
make it a big surprise.
Okay.
And then who else? Michelle Romanow,
Yeah.
Manjeet from Dragon's Den.
Wait, damn, you have like 3 dragons.
That's right. Yeah, we've got Michael Hyatt, who big tech guy. He's involved with U of T, and he's had a couple exits over $1 billion. Like really smart guy. He's on the Tomorrow's Dragons show, so he does lots of commentary with that. Who else do we have? Yeah. So, anyways, huge lineup. Every day is rock solid speakers.
And your budget, I imagine, has gone up significantly.
Yeah, the budget's increased a little bit. Yeah.
Okay, hang on. Let's go through a journey through time. Who were your headline speakers the first year?
Yeah. So Kevin O'Leary was the keynote in the first year.
Yeah.
The next year, A-Rod and Grant Cardone.
But you had other great speakers. Like
Oh,
that,
for
that
sure.
first gentleman who'd raised almost $1 billion, like that guy was really good. The older gentleman.
Oh, Joel Block.
Yeah.
Yeah, Joel's a great guy. Yeah. So, he helps people structure funds and syndications. Really smart guy.
Yeah.
A good friend of mine. Joe Fairless. So right now he's doing deals with Blackstone now. So massive multifamily guy. We're in like the billions and billions in terms of his portfolio size with Ashcroft.
Yeah.
He was in there the first year. So yeah, 100%. We've always had really good quality people, but in terms of like the famous kind of celebrity speakers, Kevin O'Leary was the celebrity the first year. Second year, A-Rod, Grant Cardone. And
they're really inexpensive, right?
Oh yeah,
2-for-1 deal.
yeah, exactly. They fly up on the same jet.
Do they really? Or
No, separate jets. Trust me, and it's separate jets.
Can you share how you know?
Oh, well, because to keep a jet in the air is about $8,000 to $10,000 US per hour.
Well, how would you know that?
Oh, I don't know how I would know. Maybe that fee's included somewhere. And then last year we had Robert Herjavec, who was excellent. We had Jordan Belfort, who was really cool as a salesperson. I thought that was really cool. And Elena Cardone came up last year too. So those were the big 3 last year, and then this year, this is like the all-star team.
And what's different about the agenda? Are there more days?
Yeah, for sure. So the past couple years, we've run a Friday workshop session. So somebody could pick a couple different workshops, a beginner or advanced workshop, and then we would have the main stage for the Saturday, Sunday. This year, we've changed it up, and we're going main stage all 3 days. And the reason is crowd control. So we have a really hard time fitting people in places that aren't the main stage area. And with us doubling in size, our breakout rooms, they can't really handle the capacity we would have. So it's far better from both organizational, but also in terms of the product people get. Now I can put the best speakers on the main stage, like all 3 days. I think it's going to be more impactful for everybody. The quality of speaker is definitely the best we've ever had. Overall, it's just going to be a better experience for everybody.
Right.
Yeah.
And I'm still regret you telling me who the unnamed speaker is.
Yeah, we've got an unnamed speaker, and then actually we have a couple unnamed speakers.
Okay.
So right now on the website we've got some people listed, but there are some more announcements to come for sure.
Because I'm the worst secret taker, so I'm really regretting you telling me.
Yeah. I'll have to you sign an NDA.
But what I was trying to get to is like you still have some big speakers that are really big.
Oh, huge names, huge. Yeah, and now with our event, we're at the point where people will ask to come back, which is pretty cool. They're like, hey, like I really like coming. Like Alex, like he actually moved around something so he could come back, which is which is pretty neat.
I can see why. 'Cause I saw A-Rod play, and I don't know what it was, but he played extra good in front of the Blue Jays.
Yeah.
That's why I still like Toronto.
Yeah, exactly. Yeah. So, Alex, and quite honestly, I thought Alex was excellent 2 years ago when he came. A lot of people write him off as a baseball guy. Oh, he just made his money playing baseball. Most people don't realize he started investing in duplexes when he was broke in the minors. He had no money, and that was going to be his backup plan. So I think, a couple of years ago when he came out, he changed a lot of minds, and he really gave people a true perspective on what he's all about. And now he's built this world-class organization with A-Rod Corp, and they're doing some crazy deals. But really, you can just tell when you're talking with him on stage, that he's got it dialed in. He's definitely an A player, and you just can tell the sharpness of his eyes. He knows what the fuck he's talking about. Can I say that? He knows what he's talking about.
So what's the plan? So you're having our speaker return. Like, is it what will he be talking about? Will he be building upon the previous, or he's got some new insights?
Yeah, well, obviously in the current environment, we've had a lot of changes from 2 years ago.
What's changed? That's all.
Nothing's changed at all. So, on the Canadian side, we're going to be, we're in an election cycle right now. So there's going to be changes by the end of May when our conference is. On the U.S. side, we've had a president change.
Oh, I never heard of him.
Well, I don't know. The other guy was sleeping, and so I'm not really sure. So, but yeah, so we've had a president change, and foreign policy shift, economic policy shift. So one of the reasons why I wanted to bring this like all-star cast out to the conference is everybody has a different take on what they think is going to happen, the strategies they're employing in their businesses. We've got people on stage that are in tech. We've got people on stage that are in real estate, all sorts of different industries, and all those industries are going to be impacted in a slightly different way. So it's more, I want to give people in the audience, I want to give them the information and the strategies and the applicable things that they can take away in real time, like immediately, and apply them to their business to help them. Because right now we're in a period of uncertainty, and we all know as investors, the most amount of money is made in periods of uncertainty. So how can we help everybody at the conference take advantage of the situation that's presenting itself right now?
Now you mentioned you have a couple dragons as well.
Yeah.
Do you what are they? Do they already have their talks planned, or did you like give them topics to choose from?
Yeah, well, I'll let you in on a little secret. Well, you know this from your event. Nothing's planned yet. We're still 2 months out. So that'll be done probably a week before, because we want to keep it timely.
Yeah.
And based on
because we may have a new prime minister.
New prime minister.
We don't even know what the platform is for the current prime minister.
Exactly. Yeah. So there's going to be a lot changing, and then even on the economic with the whole tariff situation, there's going to be changes then. So I want this to be extremely timely. So yeah, we'll probably have those discussions the week before.
That's kind of cool because you mentioned Michelle Romano and the other dragon,
Manjeet.
Yeah. So they're used to having these conversations in real time with like their own investor partners and investors and whatnot.
Yeah.
So I'd love to hearing that inside the boardroom conversation that they have with their own clients and investors.
Yeah, absolutely. And we're getting a lot of different perspectives. Obviously with Michelle with Clearbank, that there's that side of things. Manjeet, she's in the beverage space. So like just different insights, and we're going to understand how things are impacting them, and then they can impart the lessons they've learned and the strategies they're adopting right now. That's the big thing. And the thing I've learned as well over the years is, you can learn a lot from somebody in a very different business or industry. Maybe you don't see maybe on the surface you're like, oh, well, that doesn't make sense. But then when you listen to it, you're like, hey, I could actually do this in my business. And it just gives you a different perspective.
Yeah, like for example, within Canadian real estate, I see a lot of people working on real estate adjacent businesses. Because if you're a local investor, I think where do you find cash flow?
Exactly.
And then the previous avenue for cash flow is people refinancing, and that's really difficult these days. So again, like local investors, like on Canadian Ontario, I see a lot of them there are going into adjacent businesses to real estate. So they kind of need, like, it's kind of needed in
Yeah.
this current environment to learn outside of real estate. Just buying and holding whatever. You got to sort of crazy times. People need to learn to pivot.
For sure. Or they have to show up to one of your web classes. Right?
So you also changed the name of the conference.
We did. Yeah. Actually, there's a really good reason why we did that. So the past 3 years, we've been the multifamily conference. So mainly focus on multifamily real estate apartment buildings. We do a whole bunch of audience data research surveys. And we basically found that the majority of our audience was not buying apartment buildings. We had a lot of other types of real estate they were investing in. We were attracting people who weren't even in real estate, who wanted to hear the speakers. And so we basically came to the conclusion that we were actually turning away a lot of people who could benefit from the conference. We get people emailing in, calling into the office, being like, "Hey, Seth, 2 years I came. Since then, I've been able to accomplish this much. Thank you so much for what you're doing." And those are some pretty cool stories. And I just felt if we're going to continue to grow the conference, expand our impact, why are we turning people away when, we're not, only a small fraction of our audience is actually doing apartment buildings. It just didn't make sense. So with Powerhouse, we're changing the name so that way people aren't turned off just by thinking it's all about apartment buildings. And the other thing, some people didn't even know what multifamily meant. A lot of people thought we were talking about multiple families living in the same house, right? Like people who aren't so familiar with real estate. So Powerhouse is the new name. Really excited about it. And it's giving us a little bit more leeway. So, if somebody's coming from a real estate perspective, we're able, we have Jordan Zimmerman coming in, massive advertising guy. He's worked with Coca-Cola, Honda. He's behind some Super Bowl ads, like massive guy. And so it doesn't matter if you're a real estate investor, if you're a tech startup, it doesn't matter. Like the stuff he's going to give you about what's working right now in the marketing space, like you can apply that to any business you have.
Because I remember Kevin O'Leary's talk from your first event, and how he was talking mostly about loss in his portfolio, which was from his commercial office. He used to have AAA commercial office.
Yep.
For all the haters, I'm sure they love this.
That's right.
Just clip this.
We should.
Look at this loser. Just got this loser coming to his show. Sorry, I think Kevin O'Leary's content's quite good. So back to the talk that he was giving, and then him sharing about what he considers proper portfolio allocation. So obviously not all real estate. And then he talked quite a bit about crypto as well. And at that time, it was still pretty early, and it kind of worked out. He was right. Like Bitcoin is probably at least double versus what it was when he gave that talk. Because
that was like a month after the COVID lockdown. Well, the second lockdowns lifted. So that was 3 years ago, basically.
And then, and then Kevin is a dynamic individual. He doesn't just do real estate.
No, very knowledgeable and super nice guy too. Super nice guy. He just attracts a lot of hate from the keyboard people. That's all.
I don't understand it. You want to elaborate on that?
Oh man. Yeah. So the first year that we ran the conference, we had Kevin O'Leary as the keynote guy. And we had a lot of hate come in. A lot of hate.
Didn't see you in the room.
Kevin. Yeah,
they didn't buy a ticket.
Yeah, well, that's the thing. So the keyboard warriors are not the people who would show up to an event like this. And then this year, I would say the hate has multiplied by a factor of 10. Well, because like Kevin's offering his opinions, and he has a certain view on some things that could be beneficial, and I think I would call it the less astute people out there who live on the internet. They write things online, and that's what they like to do.
Interesting. Actually, now that I remember, like he ran for the leader of PC Party, so that's probably why a lot of that hate was there.
Well, PC, and then he's talked about an economic union between Canada and the U.S. So there's a lot of people who don't understand. And the thing, and this goes for all internet haters, right? When you actually check out who those people are, generally they don't have much going on in their life. So, yeah.
So what else are you excited about the conference?
Well,
how much more it cost than last year?
So definitely spending a lot more money.
Which areas are more? Because before we're recording, I asked about the venue, food.
Yeah,
Just
for
more of my
sure.
own curiosity around how inflation's going these days.
Yeah, so food and beverage obviously is impacted, for sure. Now, when you look at events, you've got some fixed costs. Like your fixed costs are going to be the venue. We take up, 250, 300,000 square feet in the North Building.
Which is the most expensive. In my experience, it's the most expensive venue in
Yeah,
Toronto,
yeah, you pay.
GTA.
Well,
There's
yeah, I would
nothing.
say, yeah, you pay through the nose, and it's like Disneyland. If you want to bring in a bottle of water, they charge you like $6 for each bottle. It's ridiculous. But anyways, like that, there's pros and cons, right? So in that venue, they have the size. You can basically do anything you want in terms of rigging, no restrictions, world class venue. It's good, but you pay for it. You pay for what you get. So that's a fixed cost. The variable costs with running events like this are, speaker fees. You can choose to bring on more expensive speakers, less speakers, that type of thing. And then also, marketing costs. I basically follow people around the internet for months leading up to the conference. So for the next 60 days, I'm sorry, Irwin, but you're going to see my face every day. So that's obviously a variable cost too. But the big changes with COVID, or not COVID, but with inflation, I would say food and beverage has been one. Overall, increase in, I guess, like your typical speaker fee would be another one. And then, wages, staffing, like all of that costs a pretty penny as well.
Just high level. It sounds like you're like at least 10% higher on everything over year.
Yeah, well, so we're basically doubling in size for this year. So obviously, ad spend's basically doubled, like all of that type of stuff. Venue doesn't really change, but venue has gone up a a decent chunk just with the way things have been in the economy over the past year.
Sounds like people should own hard assets.
I think they should.
Yeah, or
Yeah.
be speakers.
Yeah. Well, yeah. Well, for example, like we're going back to the CN Tower this year again. So last year we did a black tie party at the Art Gallery of Ontario. Everybody loved it. So the ladies had their nice dresses, the guys had the tuxes.
That's a nice venue.
Yeah, it was really cool. But this year we're going back to CN Tower, which we were at 2 years ago. So we're doing black tie in CN Tower. So that's
Right. So general admission gets black tie CN Tower.
no. So you got to buy like a VIP ticket
Oh,
to
okay,
get into
okay.
the black tie. Oh, for sure. Yeah. Well, there's capacity issues and all of that. So
Can't fit 5,000 people up there.
no, definitely not. Definitely not. But yeah. So like our top ticket is VIP, or actually I should correct myself. So we've actually added a new ticket type for this year called the Powerhouse ticket. So what we're doing is they're getting everything in terms of VIP. So they're getting the Q&A with all the speakers.
Is it on the website? Can we
Oh,
look?
yeah. We can scroll down if you want.
Adam, scroll down.
Oh, look at all those beautiful people. Look at all those beautiful people. Oh, here we go. So the Powerhouse ticket, we're basically adding 2 extra days of mastermind. So it's a 5-day event. But get this. So in those 2 days, Michelle Romanow is sticking around to run mastermind sessions, Manjeet's sticking around, and Michael Hyatt. So if you're a high level business owner and you want like a small group with some really high quality people and talking about business at a high level, the Powerhouse ticket. Yeah. It's pretty cool.
Yeah, you've never had this before.
No, this is brand new. Well, because like we take audience feedback pretty seriously, and we have
people want. Naturally, especially if you're gonna have a big event. People always want smaller groups.
for sure. Yeah, and so they're like, hey, like I love these speakers. VIP, we do the Q&A, but they're like, I want more. So we've added on the 2 extra days. So the Monday and the Tuesday right after the conference, small group mastermind, and it's going to be really cool. And quite honestly, the speakers are really excited about it because it's small group. Like they can be a lot more engaging, a lot more back and forth with it. It's going to be a lot of fun.
And then the VIP.
Yeah, so VIP, CN Tower, like all of that stuff, plus Q&As with the speakers. So, let's say Kevin O'Leary gets off the main stage, he goes right to the VIP room. We do Q&A with the VIPs. Same thing with Alex Rodriguez. Same thing with Jordan Zimmerman. Same thing with another big speaker we haven't announced yet. And that's actually been really popular over the years, where somebody gets off the main stage, we do more private Q&A. It's a different setting. It's a little bit more intimate. You get different answers than
Mhm.
what you would get on the main stage.
Mhm.
So it's a lot of fun.
I remember previous years there were a lot of photo ops as well. Are there photo ops
Oh,
as
for
well?
sure. Yeah. So I think with Alex this year, we're going to do some photo ops for the VIPs as well. So basically, like the VIPs, when I go to events, I always like when I went to your conference, for example, I always buy the most expensive ticket because you meet the coolest people. And basically, our VIP, we want to give the best access we can. So hey, you get access to the speakers, you get top-notch experiences you wouldn't experience on your own. Renting out the CN Tower, we've got some other cool things we haven't even announced yet. So it's going to be a fun time.
CN Tower. So you're on one of the upper levels.
Yeah, we'll rent out the observation deck.
Sorry.
Yeah,
How many people in the Powerhouse ticket?
oh, about 100.
Oh,
Yeah,
okay. I love
yeah,
it.
but it's a small. It's small compared to the 5,000 people. It's top notch. Yeah, top notch.
So you mentioned you did surveys of your past attendees and whatnot.
Yeah.
What are people looking for? What are their challenges?
Oh, I'll give you all the stats.
Yeah, yeah.
So, 42%, and this is specific to real estate, right? So, if somebody's a real estate investor, 42% of our audience, their number one challenge is raising capital. And so when you look at content and how we drive things, and it doesn't matter if you're raising money for real estate, raising money for a startup, whatever, to expand your business. Um, the fundamentals don't really change. So a lot of our content will gear towards that. Number two challenge for real estate investors is deal flow. You know, how to find deals that pencil out, that type of thing. And then number three is structuring. So, hey, you know, I'm raising money from people. How do I put this deal together? You know, I want to launch my first fund. How do I do that? I want to launch my first syndication. How do I do that?
Yeah.
So those are the top three. On the business side, number one challenge is lead generation, getting attention for the business. Number two is conversion. So taking that interest and converting it into paying customers. And then number three is business funding. So how do I tap into sources? Because I think Robert Herjavec mentioned this at last year's conference. He's like, he's the only guy he knows who has launched a successful tech business using credit cards and banks. Because like using banks is almost impossible, especially here in Canada, very restrictive. So we won't definitely want to tap into some alternate funding sources. How, you know, Michelle, like she's invested over $2 billion into businesses and startups. You know, she's going to be sharing, you know, hey, exactly. If you got this idea, if you need to grow, these are the avenues you probably don't even know about that are available to you.
So back to real estate question? What is this interest in local real estate versus foreign?
Yeah, so about I think it's like 73% or 72% of our audience, they're either already investing in the US or they're interested in investing in the US.
That's a lot.
Yeah, it is a lot.
That's way higher than my list.
Yeah. So it's it's very interesting. And that's why, you know, with us on the real estate content, you know, we've got Canadian investors, but we also have US investors because it's a huge interest for our audience. Huge. And obviously with CPI and everything, we're focused exclusively in the States, and you've got stuff too. But yeah, it's a huge point of interest.
Yeah. Huge point of interest. Speaking of huge point of interest, all this like Buy Canada stuff.
Yeah.
Do you have anyone talking to Canadian real estate?
Yeah, actually, yeah, we've got a couple.
People think that's patriotic.
Oh, oh man. Yeah, so we actually have a couple panels this year. The panels actually, we get really good feedback on the panels. So we've got a couple people on there talking specifically about Canadian real estate and what they're doing right now in the Canadian market to win. Yeah.
It's actually funny. A friend of mine and I were talking, like, everybody hates landlords. Why don't be landlords to Americans, especially Texans? Stick it to them.
Oh man, but you know, like I have in terms of like hate about that stuff, especially with the multifamily conference. There's some really batshit crazy people out. Like I was getting death threats. I was getting people who were threatening to like murder my family. It's just crazy sick stuff. So yeah, like people are ridiculous, just ridiculous.
Is this on Facebook?
Yeah, like they would send DM messages in to like the Facebook page, and you know, like it is what it is. But yeah, just like some really messed up people. Yeah,
it's unfortunate, and that's the downside of being in front of everybody.
Yeah,
right. I couldn't imagine what your speakers get. like a Kevin O'Leary.
Oh, for sure. Well, we kind of laugh about it.
Oh no, but like, what does he get directly?
Oh yeah,
It's way worse than what you got.
for sure, right? But at some point, like when you start getting the hate,
Yeah,
that's a sign you're actually starting to get some traction.
interesting. Were any of your speakers get overwhelmingly positive feedback?
Man, like,
Oh, I love that you got this person.
you know what? Everybody, like, we get complaints about everybody, literally everybody. So like you can't please everybody, and so like,
Petrovac, he's got haters.
oh man, yes,
Michelle,
literally everybody.
Benji has haters.
Everybody. But the thing, like for me, from like the organizer standpoint, I want to make sure, number one, I invite these people in because I want to hang out with them and I want to talk to them because I want to know what they have to say. And I also want to make sure I'm getting different perspectives from different industries. So for instance, Michelle, a Canadian, like she's got her Clearco now, and then Manjeet, another Canadian, Kevin O'Leary, Canadian perspective as well, but he's cross border. And then we have other people like Alex, right? Alex Rodriguez. We got Jordan Zimmerman. I want to put the most well-rounded lineup on stage because number one, I'm interested in it, but number two, it's showing that the audience is interested in it too, and that's why we get so many people out.
Adam, can you scroll down to the announced speakers?
Yeah. I feel like I'm on Joe Rogan right now. We got the TV screen now.
Yeah, we try to be like that. Look at these good-looking people.
Yeah.
Next row down. I think we've talked about these people.
Yeah, we got a couple of question marks.
Yeah, I'm fascinated with what Manjeet's thinking about because I like alcohol, for example. Like the younger generation doesn't drink.
I know. Yeah, 100%.
I can't blame them. I don't blame them.
Well, no,
we're talking about food and bev prices.
Yeah. Like
booze prices are nuts.
Yeah, well, like I don't drink either, right? But yeah, we got Michelle, Haley Wickenheiser, Jordan Zimmerman.
I watch so much women's hockey.
Yeah, Haley Wickenheiser, and then Jordan Zimmerman, Michael Hyatt, and then we've got a bunch that I haven't even announced yet. So yeah, it's pretty cool. It's pretty cool. A-Rod's changed his picture though from a couple of years ago.
So who should come to this conference?
Yeah, so this conference is a perfect fit. If you're a business owner, right? 7-figure, 8-figure business owner. If you have a startup idea, perfect fit. If you're a real estate investor, if you're a lender, a developer, anybody in business who's looking to attract more customers or investors, do a better job at converting them into revenue and scaling their business and wealth. That's who should come.
Pretty much everyone.
Yeah, we have like, last year, for example, we'll have somebody, who's just starting out, and then we'll have somebody with $1.5 billion of assets under management and everything in between. And that's the cool thing. And I can tell you, like, the guys on my my ticket sales team, they love it because, they're calling people who have requested more information, and like, somebody could pick up the phone. They could be brand new, or they could be running a very successful business. So it's fun for them too. They get to talk with a whole bunch of different people.
Mm-hmm. And tell me about what I remember you were doing a lot of South USA multifamily properties.
Yeah, for sure.
Yeah, give me an update on that. How's things?
Yeah. We actually have a deal right now in Texas that we're in San Antonio that we're wrapping up.
Nice.
Yeah. So that's wrapping up. But yeah, we're very, very bullish on the Florida and Texan markets for sure. So we've got a couple others in the works that right now we haven't announced, but we're almost there.
Tell me about for the people who didn't listen to previous episodes, for example, like what is it you're looking for real estate investing? Because when we first met, I believe most of your properties were they local in Milton?
Oh yeah. Well, those were the ones that disappeared. So
they're still there.
Yeah. But yeah. So I'm a partner with a company called CPI Capital. So we focus exclusively on U.S. real estate, specifically, Florida, Texas.
What's wrong with here? Close to home, buy Canadian.
You could buy Canadian.
Don't you want Ontario, Canada tenants?
No, I do not. It's just, we look for some specific things in markets. You just look at the GDP of Texas, right? And you look at the Canadian GDP. You've gone through this stuff before. Like the entire Texan market exceeds the total GDP of the entire country here.
It helps that they're willing to access their oil, but yeah.
Oh, drill, baby, drill. Right. And then you've got government policy in place too. And there's just the long-term market drivers that we're looking for. There's just growth. And then the government policy, I can't understate it. It does play a role in it as well.
Yeah.
So we're pretty bullish on the Florida markets. There's a couple that we really focus on. Same thing in Texas. So, we're growing the portfolio. We're having some fun, eating some barbecue at the same time. Yes.
I remember someone was telling me, I forget who, it'll bother me now. Someone was telling me about how Texas employees of the state are actually like basically doing business development, going to other companies in different states.
Oh yeah.
And telling them like, hey, come to Texas. The land's you can get the land for cheap at this value. There's no state tax.
No, well, that's the thing. So, and this is where,
So just to clarify for the listener, like no state taxes are equivalent of saying there's no provincial tax.
Yeah, exactly.
Which is like half your tax.
Yeah. So you look at policy from, a federal level, a state level, and then a municipal level. At the municipal level, there are some cities who are very aggressive in targeting and going after, companies to move in, outside investment, and some of them do a really good job at it. Really good job. And then there's other cities who don't.
We avoid those ones.
Oh, for sure. But yeah, like there are entire departments whose only job it is to provide relevant statistics and information to possible investors and companies and present a business case as to why that person should leave California and move their company. Right.
Well, anywhere where, don't know a better way to say it, anywhere that's pro-union and high taxes.
Oh, for sure. 100%.
Right? Like, why would you, if you're looking to invest, generally you're probably going to look where it's more business friendly and lower tax.
Yeah. Well, Erwin, you're telling me that you can't tax your way into economic success, right?
I'm a business guy, so I'm like, show me the history of where that's successful.
Yeah. Oh no, we just have a homeless problem. Everybody's on the streets and there's poo everywhere. Oh, we'll just raise taxes. Yeah.
I digress. So, which markets in Texas and Florida are you interested in?
Yeah. So the deal right now is in San Antonio. This is actually a build to rent community. Yeah. So like 62 units. We have a good relationship with the builder who just built the exact same project just down the street. So it's a exact carbon copy. So the advantage to that is we know exactly what the costs are, exactly what the timelines look like, exactly what the properties are selling for, renting for. It's a carbon copy. So we're going into that with a high degree of confidence, and the numbers are actually really, really, really good.
Is there more information available on it anywhere?
Yeah, for sure. If somebody's interested, they just have to go to sethferguson.org/invest, and then you can fill out a quick little like calendar thing, and then you can talk with my team. Yeah, for sure.
I always think that people should, like for example, when I started investing in real estate, I looked at 100 houses.
Yeah.
I was licensed, so I could do it on my own, not bother a realtor, go to open houses and whatnot. And then only then did I feel I knew what the top 20% looked like, and then I was only interested in owning the top 20% for that segment I was trying to target for my tenant profile. And no different than this. Like this is a build to rent. Can you elaborate more? Is it houses? Is it high rise?
Yeah, good question. And I should probably explain what build to rent means if somebody's listening and they're not quite sure.
It's not really a Canadian thing. No one really builds to rent here.
Yeah.
So that is.
Yeah, well, there's a whole thing like here, people will convert an apartment into condos, right? In the US, they'll take condos and convert them into apartments. So it's just the economics at play. But build to rent in a nutshell, think of a single family home that you would typically rent out. It's not very scalable. There's a lot of inefficiencies. And then you take apartment buildings, on the other hand, very efficient, but it's like apartment buildings. It's there's no home, there's no backyard or anything. Yeah. What build to rent does,
if the demographic has good income, they generally want a yard.
Exactly, right? Families as well.
Yeah.
So what build to rent does is, a number of years ago, a couple of the big firms said, hey, well, why don't we just have single family homes where we can get higher rents and have the tenants stay for longer on average? But why don't we just do this at scale? Yeah. So,
sorry to interrupt. For the listeners' benefit, pretty much all of the largest REITs on Wall Street all do build to rent.
Huge, massive amount of money.
All of them, all the household names: America Homes for Rent, Lennar, Tricon, Blackstone, they all do it.
Everybody,
Yeah.
right? So basically, in our case, we're building over 60 units on this site. They're built to our specifications. We decide what we're doing because we're basically gearing it for rental. Where this entire community is being built to rent out. But the benefit is, in terms of financing, in terms of operation, it operates just like an apartment building. So you're getting the efficiencies of scale that come with multifamily, but you're also getting the higher average rents and the stickiness of the tenants at the same time. So it's a good middle ground. This is our first build to rent project that we're doing. Really excited about it. We've got a great partner in terms of the builder. But generally speaking, we're a multifamily value add firm. But yeah, we're super excited.
So this, from the outside looking in, does it look like just any other subdivision?
Yeah, for sure. It's
because again, like most Canadians have no concept of what built to rent, what it looks like in the States.
Yeah,
you're building basically a 64 home subdivision.
Yeah, and the only purpose is to rent it out. And anybody who's done single family homes, they'll know if they're buying a resale home and they're going to rent it out, there's probably things in that home that have been done for the homeowner in mind, not necessarily to maximize rental value. So the materials you're going to use, you're probably going to want to use a sturdier floor, like that type of thing. And a lot of homeowners, they'll often over improve their property, but for rentals, like, are you maximizing the ROI? So at the end of the day, we want to provide the absolute best living situation and comfort for the tenants. We want to make it affordable, accessible. And when we have full control from the ground up, we can basically do whatever we want. It makes it a lot easier.
And just as a sound like a broken record, real estate's hyper local.
Yeah.
Because the question I always get from investors is, "Oh, why don't you just build apartment buildings? Why are you doing houses?" Because it always end of the day, it's what the customer wants and will make you the most money.
Yeah.
And in certain markets, it's detached houses.
For sure, yeah.
Single family detached houses.
Yeah, you have to have a handle on what tenants are looking for. For instance, you can compare two markets. One market, the expectation is you have a built-in washer and dryer. Another market, that's not even an expectation. Some markets, they'll expect, granite, stone countertops. Other people, just typical countertops are fine. You have to understand, well, what your demographic is, who's moving in. Is it families? Is it single professionals with a dog? Is it couples? Who is it? That's going to help guide you on, what kind of types of amenities you're going to offer. Do you need a gym? Do you need a dog park? All of that type of stuff, for sure.
I was actually reading, I've repeated this before, I was reading the quarterly analyst call notes for America Homes for Rent, which is a top 5 REIT.
Yeah.
Right?
Huge.
Huge, yeah. And on the analyst call, and someone literally asked, why don't you build multifamily or at least some density like townhouses? And the answer was, we found in our experience, if anything with density, even townhomes, they said they had higher vacancy, more rental concessions, meaning you have to give back to the tenant, and so that's lower valuations. If your rents are lower, it's worth less, right? This is just business. So they decide to build what is in highest demand, and that is detached homes.
Yeah, 100%, right? And I think,
and again, it's market dependent.
Yeah. Oh, yeah, for sure. And it's also firm dependent, right? It's like what types of skill sets does the partnership or the ownership look like? What do they bring to the table? If somebody's got a great track record building, and that's what they know, and they can and they have an inside edge on the rest of the market, build. If somebody's a great manager of an asset and they excel at the management side, well, buy something already existing and run it. With us, we're fortunate where we've got really strong people on the development construction side. We have really strong people on the management side. So we're fortunate that our company skill sets can run a build to rent project, but also do multifamily really, really well.
Right. And when you say multifamily, is most of it vertical, like 30-story?
No. So we like the garden style. So what I mean by garden style is you'll see 2 or 3 story properties. You get lots of green space. You'll have the pool. Obviously, we're not dealing with snow in Florida.
Pictures? Can we bring it up on your website?
Oh, yeah, for sure. Yeah, you can go to cpicapital.ca.
Oh, we're plugging websites now.
Oh, this is like, hey, Jamie, pull up that clip, like on Rogan. Yeah, sure. Yeah, so
is that what they look like?
Yeah. So this is garden style. So if you scroll down, this one, yeah. Well, it's Florida, right?
Man, this is way prettier than the stuff.
Oh,
What
yeah, yeah,
multifamily
for
looks
sure.
like in Ontario.
Oh, yeah, if you go here, go track record, there's going to be some other photos and stuff. Maybe the internet's kind of running slow.
For listener, we actually we do post these videos on YouTube as well, so those who are following on YouTube can see what we're talking about. But if you go to cpicapital.ca, there's a
Yeah,
link to track record
we've
of
got all
garden
the
style.
pictures, all that stuff. But yeah, it's like the reason I personally like garden style properties is number one, you don't feel like you're living in like this concrete tower. You've got grass, you've got pools, you've got like you have green space. If you've got kids, they can run around. You've got playgrounds. You're not just not in that vertical. Now, downtown Toronto, it's all buildings, right? But the areas we're looking at, it's like we got one in Tampa, right? Great market. Oh, here we go. I think it was just loading slow with the internet. But if you click on one, there you go. You can click on that one here. Atlas. There we go.
I remember something like Grant said at a long time ago, Grant Cardone. He was saying how if you show nicer properties, it's easier to raise capital.
Oh yeah, for sure.
Because I remember when he first showed me his stuff, I'm like, this isn't actually your stuff. It's just like marketing real stuff, right? He goes, no, these are actual properties.
Yeah.
I'm like,
well,
this is pretty good looking, nice looking stuff.
Yeah. Well, when you're selling anything, like you have to have a little bit of sex appeal, and if somebody, if the
that doesn't exist in Ontario multifamily.
No.
I'm sure everyone's grateful you can't scratch and sniff. Though.
No, and so with this property Atlas, like this is a 70s vintage, right? So
really,
yeah, but this is what I mean.
70s.
This is what we do, right? We take an older looking thing, and we freshen it up and add some beautiful stuff to it.
Right. So both inside and the common areas, like that interlocking looks new.
Yeah. So we're changing the exterior. There's some other stuff we're adding right now to the exterior, cleaning up, modernizing it, in-unit renovations.
Right.
Yeah, for sure.
So what kind of let's get more detailed. Like what kind of renovations provide you ROI?
Yeah, so when we're looking to go in, we're not looking to do like heavy lifts. Yeah. So we're not
like dividing one unit into two.
No.
Basement suiting it.
No. But what we're looking to do is we're looking at coming in, flooring, the boxes in the kitchen, cupboard doors, vanities, toilets, lighting, paint, that type of thing on the inside.
Okay, so nothing crazy.
Nothing crazy.
Pretty light.
But it's also looking at, yeah.
Is that what the main room looks like?
Yeah, this one's obviously a Class A property.
Wait, was that what it looked like when you bought it?
Yeah. This is like a trophy.
The front foyer, is that what it called?
Yeah, so talking about for instance with Grant and that stuff, like this is a Class A asset.
Wow.
Yeah. But yeah, so when you're looking at, and each type of property is going to have a different business plan. So with the one we were looking at before, Atlas, that one is called what's called value add. So we're taking an asset that we feel is underperforming in the marketplace. Mm-hmm. We're doing either physical renovations or we're improving the operational efficiency of the property, and then we're going to drive rents and then improve it.
Interesting. So for the listeners' benefit, it almost looks like a vacation resort. Like the property is really nice. The finishing on the inside,
for sure.
Modern.
Well, you're in Florida.
You have a shared pool.
Yeah, you're in Florida, like
an outdoor pool, not like an indoor pool.
No. Well, you don't have to deal with snow. So but this is what you get. So for me, if I'm buying a piece of real estate, do I want to deal with snow most of the time? No. Like here, you can swim.
There's nothing like this in Canada.
No. So, but these are great examples of garden style assets.
Do you have an Instagram too?
Oh yeah, just go to Seth Ferguson Official.
And you have pictures of these on there too?
Yeah, if you scroll, like we put a lot of different content on the Seth Ferguson Official.
This is I had no idea.
Oh yeah,
I thought you just did high rises.
No. Oh no, we don't do high rises. No, but you can see when you start looking at the garden style, it's got a nice feel. You see grass. You've got all sorts of amenities. Right. It's a lot of fun. Yeah.
And I have a friend who's like exiting all his Ontario stuff because he's having even his own staff the tenant property manager relationship's the worst it's ever been. He was telling me.
Yeah.
His own staff feels uncomfortable with the tone that tenants have.
Gotcha.
And you can like it's so like we've been on this affordability issue forever, and now it seems like we're close to the breaking point.
Yeah.
And so people are on their last dollar, and there's
Yeah. And I think what's happened is we've had decades of mismanagement of it, and it's not getting any better.
versus like your tenants are they live in paradise.
Well,
Are they happy?
yeah. So we provide housing to regular people. So you've got doctors, you've got nurses, you got firefighters, police officers, like just regular people.
Yeah.
So that's what we're doing. We're providing a high quality place to live, at like affordable, fair prices.
What's the typical unit? 2 bedroom? What is it?
Yeah, two bed, 1 bath. Well, depending on the asset, right? So
Let's start with the Florida one.
yeah. So if you just click on that there, so we have a mix of 2 bedroom units, and obviously you have a couple different layouts and styles.
And how much is it to rent a 2 bedroom?
Right now, we're just under $2,000 for some units, so like it's affordable. Yeah.
1 bedrooms in Toronto.
Yeah, this is what I mean, right?
2,500.
This is what I mean, right? So we've got some 2 bedrooms, some 3 bedrooms. Depending on the asset, sometimes you have some bachelors in there as well. But like
How
here's
much is the bachelor to rent?
like compared to here, it's dirt cheap, right? It's insane.
And sorry, what city did you say this one's in?
This one's in Tampa.
Tampa's a nice city.
Oh yeah, it's great. Yeah. We were down there, drove around, had some great barbecue. It was fun. So, but yeah, like it's just a very different feel. Like so basically our business plan is we acquire properties where we feel we have an advantage in the marketplace. We'll acquire them and deploy that advantage.
So I have this theory. I don't want to be tested. I have this theory if there was a union between Canada and US, just like the European Union has, where they're able to travel cross border, work and live wherever, how many Canadians would leave?
I would say a lot.
And that would devastate our local real estate.
It would.
Yeah.
It would.
And
A
our
lot of
market,
people.
like-
Yeah. Well, we're already like losing our smartest people to the States.
Yeah.
Like
And
hands down.
Edmonton.
Yeah. Well, yeah. But we definitely have the brain drain. If you remove that,
You remove the border, basically people are free to go wherever.
yeah, I think, well, why you just look at the size of the marketplace in Canada, it's like we are just a drop in the bucket compared to the economic juggernaut, which is the United States.
What most Canadians don't appreciate, I mean, that's not the word. Again, I didn't know much of this stuff until I started doing my diligence.
Yeah.
But like, for example, San Antonio has a Toyota plant where they make the Tacoma and the Toyota Tundra.
That's right. Yeah.
Right. And then when I was driving around Georgia, I was sitting in the chair like, I thought Americans bought American. It's all Toyota Tundras out here.
Yeah.
And I had no idea where it was made. Like, it's made in San Antonio.
Yeah.
So my point is, take an automotive employee in Ontario, say it's Cambridge. Your average detach is over 800,000. You can go live in San Antonio. My house is a lot nicer than your $800,000 houses in Cambridge. My 2,400 square foot house, 4 bedroom, 2.5 bath, I paid $265 in San Antonio.
Crazy,
How
right?
do you not see people leaving?
Yeah, well, you just so Google Vancouver real estate, and you look up like a $1.2 million place, and then you look up in San Antonio $1.2 million place.
Oh my god!
Huge difference, huge. You're buying a castle.
Yeah. Like for $1 million American, you probably get 4,000 square foot.
Yeah, there's some nice places.
Garage, gated.
Yeah, and then then we can talk about advantages if you're a Florida resident. Like all of that type of
Low
stuff.
to no state tax.
Oh yeah, so I just think when we're looking in a general overview, and this will definitely be a topic at the conference this year, but how do we give our businesses and investors in Canada an edge? Because it's competition, right? Every country's competing. We are competing for investment dollars, just like the US is. And I feel at this moment that the US has an advantage in a number of different areas. So how do we make our country competitive, right? That's what has to get tackled at the federal and the provincial level.
Some nice things though. I like the fact that we don't have any shootings up here.
Yeah, true.
So I always,
true. Yeah.
So people always ask, "Oh, when are you moving?" The thing is, you and I made a lot of good decisions. We bought real estate early on, so we can afford to be here.
For sure. For sure.
And then, if you exclude housing, I find cost of living here is cheaper than most places in the States.
Well, yeah, and then you get into the healthcare thing. If you don't
Yeah,
want to pay
that
for
is that
private
too.
healthcare and
Yeah.
all, there's definitely like other factors at play. But I think just from a business investment standpoint, it just changes to our tax code. How the government even approaches investment. How do we incentivize people? Um,
I think even put more simply, I think it makes sense for everyone to. We've always talked about multiple streams of income. Having one of them in U.S. dollars probably makes a lot of sense.
for sure.
Right?
And,
I'm happy to have that argument with any financial planner who thinks that's a bad idea.
100%, 100%. And with us, like we have a lot of Canadian investors that invest with us, and we have a lot of
Right.
U.S. investors. We're basically split down the middle.
Oh wow.
But the advantage with us is, we're Canadian, so we understand what it takes to move money across the border in the most tax efficient way. So we've structured it for Canadians. But yeah, we've got a ton of Canadian investors where, like they actually want to put their money to work in the US. They just see it as, just a better investment for them. It aligns with their goals, and they see the US as being very strong. So, like there's investment deals in Canada too, but for us and our company, we're looking at the States.
You don't offer trips, do you? People.
Yeah, hey,
nice properties.
yeah, hey, come swim in our pool.
Yeah. And it's you're all long term rental, no short term.
No, yeah, no, we don't do short term. So, yeah, like for instance, with Atlas there, that's going to be a 5-year hold, give or take. Like we'll see nobody has a crystal ball, but 4 or 5 years we'll probably be looking at exiting. We acquired that one middle of the year last year, let's say.
Why the decision not to do short term? I ask because it's a very popular topic that keeps coming up in my feed and in my surveys.
It is, yeah. Well, short term, I think a couple things to break it down. Number one, the long term rental market is proven. So when we're raising millions and tens of millions of dollars, our business plan, like, it's rock solid. So we want to put that money to work. Short term rentals, depending on where you're at, legislation is changing. So there's a number of people in a number of different cities where they acquired, short-term rentals, SDRs, and now, local government has a shift, and now, they're SOL. And I think at scale, I know some operators have experimented having, long-term with a couple short-term units in there just to keep the velocity of people coming in and out. That's just not something we're looking at. That's not our thing.
Yeah. Because generally neighbors don't like them.
No. And like we'd rather get a family in for a couple years, right? Provide them an affordable, safe place to live that's high quality, rather than having people come in for a bender on the weekend and then they leave.
Right.
Yeah.
Because you still have this density here. Like some of these are row houses.
Yeah, for sure. Yeah,
so,
absolutely.
Yeah.
But yeah, that's just not our thing. Other people I know are being successful at it. Our thing is like, that's our bread and butter.
Very cool.
Yeah.
Very cool. Anything else I should be asking?
Well, I don't know. Where can you buy a ticket to the conference?
I thought we already covered that.
Oh, did we? Yeah. Well, they got to go to
It's been showing in the
yeah.
background.
No, they got to go to powerhouseconference.com.
And then when's the conference?
May 23, 24, 25. But if you get the 5-day with the 2-day bonus mastermind, we include the 26th and 27th.
And those are like the very small group.
Yeah, that's the mastermind. So Michelle, Manjeet, Michael are sticking around. They're really pumped for that. Really pumped.
Right.
Yeah. And then I think the question you should ask too is, like, if somebody's listening right now and they haven't subscribed, why not? They should hit the subscribe button right now.
I'm already getting your stuff.
Oh.
Yeah.
No, I mean for your show.
Oh.
Yeah, they should subscribe.
We have a cap on 17 listeners.
Oh, okay.
We can't handle more capacity than that.
Yeah.
What do you see for business going forward? What do you see for real estate and business going forward? We are in interesting times. We're recording this late March 2025.
We are. I think there's definitely a lot of fear in the marketplace right now.
There's tons of fear.
Tons of fear. Yeah, and especially on the money financing side, a lot of people are sitting on money right now. I don't have a crystal ball, but I think if people are able to position themselves the right way over the next, like 12, 18 months, once we pop out the other side and things kind of loosen up, I think we're going to see some pretty incredible growth. I think. I don't know. But I know with us and what we're doing, we're making some pretty big moves on our end, because we want to be ready to rock and roll when things kind of turn around. Yeah.
I have more questions about Florida because
Oh yeah,
people still ask about like hurricane risk and whatnot. You're in Tampa.
yeah, yeah. Well, we actually got hit by a hurricane. Alice, we got hit by a hurricane, and so one of our buildings on site, because there's multiple buildings, right? We lost a roof. So what we think happened was we think a tornado in the hurricane kind of hit. So the benefit is we were going to replace the roof anyway, and the hurricane just did it for us. So it was part of the
Save
business
on the
plan.
removal.
Yeah, exactly, exactly. So, but yeah, like what we do is we obviously look for floodplains. We make sure our insurance is there. We look at the history of the property. So like this property's been around. It's seen a lot of weather. So we look at, okay, well, what's the history of what's happened in the past? How well has it weathered things? Are we in the right location? Once we answer all those questions, we don't have concerns. Like we work with really good insurance people. We work with really good, inspectors. We're solid. Yeah.
Is there a difference in your multifamily insurance versus like the retail insurance that regular everyday people get?
Oh, for sure. Yeah, yeah, for sure. One of the things we try and do every site we walk, where we're very serious about the property, is we'll bring our insurance guy out with us because he's going to look at it through a different lens. And so, like anybody who's walked property before, like you want to have your contractor there, you want to have your insurance guy. Depending, sometimes the lender comes out and we'll walk it as well. And our team has some pretty diverse backgrounds in terms of real estate, and everybody picks up on different things in the building. So, with insurance, we're looking at construction. We're looking, we'll walk and see some warping. So, for instance, let's say it's vinyl siding, and you're in Florida in the heat. Like, if it's not installed properly, you'll get warping. Well, why is that? If it's wood frame construction, is there warping in the framing there? And you can generally see that. But those are things the insurance guy is going to be looking at too. He's going to be looking at, are the garages placed under the property versus somewhere else? Like all of that impacts it.
Because under it could flood.
For sure, yeah. And
Including
so
vehicles getting flooded.
yeah, yeah,
Terrible.
and so I think the big difference from putting insurance on a single family home versus apartment building is just you're multiplying it by a scale of like 100, 200 different units, and you've got different building codes. You have to worry about like like fire, like all of that type of stuff.
Mm-hmm.
So,
and what other markets you looking for in the States? Any just anywhere in Florida and Texas?
well,
or?
no, so like we're pretty bullish on Tampa. Atlas was our first asset there, so we'd like to acquire a couple more. We're hunting very aggressively in Tampa.
And say the same thing, A class?
No, so that's a class that's like a C plus B minus asset. Now, obviously, we're moving it up. Yeah,
Oh, okay. So when you acquired it, it was a lower class, and you've since
for sure.
upgraded it.
Yeah, like we're doing our work on it right now. But like it's a good looking asset, right? So
Something to be proud of.
yeah, no, absolutely. So this is our bread. Like I said, it's our bread and butter. We can acquire an asset like this, do the renovations. We can change the management of the asset because we're very strong on the management side. So we basically take a look at the property as a business and say, okay, this is how the business is operating right now. These are all the efficiencies we can find. We can actually save on these expenses or invest more heavily in different areas and get this result out on the other end. And that's why our investors invest with us, because we've got the track record of doing that. So, but yeah, these properties are fun. Like they're fun. They're stable. They produce cash flow, which doesn't really exist here in Canada.
American dollars, too.
Yeah, in USD. And so, we're able to pay our investors monthly distributions, right? So
I get this a lot. So I'll ask you as well. Does the currency bother you?
no. Well, right now you're getting a 40% bonus right now when you convert into Canadian. But no, definitely not. And a lot of the investors, even right now where the exchange rate isn't like great, it's a long-term play. They're like, hey, even though all my money's in Canadian, it makes sense just to do it once. And now my money's in USD, and then away they go for the next 20 years.
Right. I actually did the math with assuming a 30% down. Just again, I worked with ChatGPT on this.
Yeah.
I just needed 2.6% price appreciation to cover my FX loss.
Yeah, for
For
sure.
my worst case.
Like it's not a lot. I think a lot of people who are just starting at thinking about cross-border investing, it's one thing that pops up. They just like it's one of those like kind of scary jitter things.
Yeah.
But
If
when
you're
you
going to buy one, it's a big deal.
Yeah,
If
yeah.
you're going to buy multiple, like, it's like stock investors talk about what DCA, this average cost basis.
Oh yeah.
Right? This average cost base and will work out.
For sure, right? And we're at the point now where we have like investors investing in multiple deals, right? So
Yeah, so they're basically spreading
it's the
spreading
same
their FX risk.
yeah. So yeah, and I think if somebody's worried about the forex, I appreciate it, but you have to look at, well, what economy are you investing in? There's other reasons why you want to move your money across the border. Same reason why you're across the border, right? Like there's solid business decisions and reasons why.
The thing I say is, what financial planner in the world would say own all your income and all your assets in one country?
Yeah, exactly.
Right.
Exactly.
If they encourage it, they're selling you something.
Yeah. Yeah. 100%. Right. And especially when your next door neighbor, they're like an economic juggernaut, right?
The only one.
Yes.
And may be the only one ever.
Yeah. Money from all over the world is looking to go there.
Yeah. And even if China catches up, do you want to own a piece of property?
Exactly. The people will take it away from you. Yeah.
Seth, thanks so much for doing this. One last time, where can people get more information on the Powerhouse Conference?
Oh, powerhouseconference.com.
.com.
.com.
Not .ca.
No, .com. Here we go.
Yeah, I imagine you'll draw like quite a few Americans for this conference. Oh, that's probably a bad word.
Oh,
There'll be Americans in the room.
Yeah, well, we actually get people from Europe, Middle East, Africa, UK. It's pretty crazy to see how far people actually travel for this. It's pretty cool.
Especially after you announce your final big ticket.
Yeah, that's probably another.
See more people cross the border.
Yeah, that's probably another week away, and yeah, that'll be cool.
Because my American friends are like, everything's like 40% off here with our money.
Yeah.
So like, as a Canadian, wouldn't you like to say that too?
Yeah.
Wow, with my US money, I'm getting like 40. I'm saving 40% here.
Oh, 100%, 100%. So yeah, for sure.
All right, looking forward to this. I can't. And then for me, like, it was always great for me to see all my friends there. It's like a high school reunion for me.
Oh, for sure. Well,
people I like better than high school.
Yeah, but well, you're a superstar. Everybody listen. I mean, 17 people listen to your podcast. So
yeah, hopefully 6 or 7 of them will be there.
Yeah,
and hopefully all 17 listeners are there. I'd love to see you.
Yeah, Erwin does free photos. He'll autograph anything you want, any body part you want. He'll sign it.
Thanks again.
All right, thanks.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover or have there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this have arrived on. I'm not hard to find. We're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.